Hello and welcome to this video. In this video it's all about you and your small business and how to save some taxes along the way. So stay tuned while we give you some real in-depth look into how to save some taxes for your small business. Hello, my name's Patrick, a chartered accountant, certified UK trainer and also that QuickBooks Chap. This channel is all about you and your small business and how to make sure you're getting the most out of that small business, get as many tips and tricks along the line and hopefully save a little money as we go along. Our aim at Boffix is to make sure that we don't just survive as a small business, but we thrive. Now, as head of accounts at Boffix, one of the questions we're always asked is, well, what's the most tax efficient way for us to be able to run our business? And that's what this video is all about. So hello 2021, and here are our top tips on making sure that your business is as tax efficient as it possibly can be. Let's have a look at tip number one. Now tip number one is really straightforward, but it's also probably one of the most important decisions you will make. And that's, what version of business are you going to create? And what I mean by that is, are you going to have a sole trader, a limited company, a partnership, an LLP, a PLC? Which type of business is going to be right for you? Some of those options there are going to be more tax efficient to others, but it's not a case of one shoe fits all. Every business is different, every person is different, so you've got to make sure you get that right. Now, over at our sister channel, Patrick the QuickBooks Chap, we've already done a video on limited company versus sole trader versus partnership and everything else. So head over to that video to get a little bit more in-depth knowledge. Or like and subscribe this video, because that's one of the videos we're going to be tackling here on this video, but in even more depth than we did in that previous video. We're going to look at every little aspect of it so that you understand as a small business which is right for you. But in a nutshell, it's really straightforward. A sole trader is you as a business. And all that means is that you are responsible for that income. So as a small business, you're going to have income and of expenses, and at the end of a tax year, you're going to have to include that on a personal tax return. And you're going to put that information onto that tax return. Now, we've already done videos on how, why, and everything else. So again, like and subscribe, get yourself involved in this channel. But important to note is that if you've already got income, then this other income is also going to be included in that same pool. So that's where, as a sole trader, you can find yourself that it's not as tax efficient, because you could hit higher rate bands, you could use your personal allowance. There's lots of little reasons why as a sole trader it's not very tax efficient. Whereas a limited company, you have a very distinct point here. On the left hand side is you, on the right hand side is your business. And it's important to note that that business, that limited company, is a separate legal entity. You as a person will want to be paid from that business. So you're going to still have to interact with that business, and you're still going to have to do a personal tax return. But this limited company will also have to do a limited company tax return as well. You're going to have to do another set of accounts for Companies House. And as you can see, it's getting more complicated, the amount of administration alone. So for simplicity, a sole trader is by far the most simple way of doing it. You record your income and your expenditure and you put it on a tax return. On a limited company, you've got all these extra elements: a confirmation statement, a personal tax return, a company tax return, a set of accounts that need to go to Companies House. And each one of them also comes with their own deadlines and everything else you have to manage. So from an administration point of view, it's more complicated. But if you're done right as a limited company, you can find significant tax savings that way around. So that's where you've got to be careful. That's where you've got to understand what's the difference between the two, which one's right for you. Picking that right business is going to be crucial for you and your taxes going forward. But also you've got to make sure you weigh out how much it's going to cost in terms of what it's going to cost to maybe have a business advisor, an accountant, something like that, which you'll more than likely definitely need for a limited company as opposed to just having a sole trader. So put it all into consideration, weigh it up. Remember, on this channel we'll be giving you more insight into which is right for you. So get that sorted, and then once you've got that sorted, let's move over. Step number 2 is really important. It's the notion that you as a business owner really should have a separate bank account. Now, as a limited company, you're going to be forced down that route anyway. Legally speaking, that separate legal entity must have its own bank account that it goes with it. As a sole trader, technically you don't need or legally need to have a separate bank account, or a separate business bank account, should I say, but I would highly recommend at least having a business bank account. And don't be afraid to use some of the challenger banks, so your Revoluts, your Tides, your Sterlings, because they're quick and easy to generate, and you can make a decision then if it's something that's worthwhile or not, as in terms of the business. and then maybe quote unquote upgrade to a more established bank later down the lane. But having that separate bank account is so important. What that means for you as a small business owner is you're going to discipline yourself. When it comes to an end of a year, it doesn't matter what version or type of business you've gone for, you're going to have to account for those transactions. And the worst thing you can do is, say, pay for something and not even consider it from a tax point of view. And if you do that, what you could end up doing is not going through and giving you the opportunity to be able to put that onto paper. Whereas using a separate bank account and you discipline yourself, you're going to be able to say that everything's personal is in your personal account, but everything's business related is in that business account. And if you discipline yourself that every time you have something that even remotely resembles business, you pay for it and you transaction it in that business bank account. And when it comes to accounting for everything at the end of a year, you just need to go through that bank account and make sure everything's included. Furthermore, even if it's a transaction you later find out wasn't quite business related, at least you've had that consideration. At least you've been able to explain or figure it out or look into it in a little bit more detail. On the flip side, if you completely forget about that, well, that won't be included at all. So having that separate bank account can have a real good effect. And also discipline-wise in terms of, well, what is my business stock? How much working capital do I need? How much money can I take out each month? Them sort of questions are going to be so much easier for you to answer and understand and gauge if you've got that separate bank account and you've got that separation between what's business and what's personal. Please do yourself a huge favour. Get yourself a separate bank account that you can use purely for business purposes. It's going to help you go a long way in starting out that business. Okay, tip number 3, and this is a doozy as well. Basically, HMRC have your back when it comes to, as a small business, accounting for what's called simplified expenses. And over here, I've basically just gone into Google, and what I've done there is I've put simplified expense if you're self-employed. And this works for self-employed and limited company for most cases. But basically, you get an overview. And in here, there's a load of flat rate costs, they call them, where basically you can keep records and transactions and make it really easy for you to account for certain transactions. For example, your vehicles. It gives you the breakdown of what your mileage is going to be. And all you then need to do is record mileage as you go along, and there's software that can help you do that. And that mileage will then be converted into pound coins, basically, that you can put into your expenses. And it saves a lot of those questions and issues and problems you may have with your business. Remember though, if you do go down the mileage point of view, you don't put any other costs of a vehicle in. So repairing and everything else will all come down to kind of personal expenses. The mileage element, the 45p in the first 10,000 miles, is all about the whole cost of a car or a motor vehicle. And they also include a simplified expense checker where you can look at including the actual running cost of a vehicle versus mileage and see which works best for you. But in most circumstances, for ease, the mileage element is the best, because from a mileage point of view, you're only putting your business mileages in. If you're going to put the cost of that transaction in, so the cost of the vehicle, then you're going to have to account for it from a personal point of view. So at some point, you're going to have to adjust it by X amount of percentage to account for personal use. So this is where the mileage point normally becomes quite useful to you. The other part on here that's really useful is working from home. So this is a flat rate cost where as long as you're doing the hours as shown here, you can actually just apply that and put that directly into your account as an expense. And instead of having to look at how much your proportion of personal business and all that sort of stuff is included, you can just use this one rate. The reason that's so important and so useful is because if you go down the route of looking at putting personal expenses in, so like heat and light because you work from home, then one of the difficulty and one of the problems can be if it's not done right, you can start giving yourself some really adverse tax consequences later down the line. Ultimately, what can happen if done incorrectly is you're basically saying that your personal asset, your house, isn't quite personal as much, or at least a proportion of it's not. All that could mean is if you come to sell that house, you may find additional taxes implied on it because you're not getting all your reliefs because some of it's counted as business. And it's a route that no one wants to go down. So looking at the simplified accounts route, looking at the simplified expenses can be a nice, easy way of gaining some extra few pounds and pennies and putting that in. So do have a look at the sort of transactions, see if they can help you. The next one is using software. Now here at Boffix, one of the software you will hear us talking about quite a lot is QuickBooks Online. And the idea of using this form of software is twofold. Number one, it's going to be mandatory soon anyway. So in the next couple of years, we're going to go through what's called making tax digital, and when we hit making tax digital fully, you're going to be required as a small business to be filing your returns via some form of software. And the rumours are it might even be on a quarterly basis. So you're going to be forced into software at some point. Well, why now? What's the benefit? Well, most of the time it's all about giving you the opportunity to be able to keep your information on there really easily. And that way you can start really diving into what's in there. And most of the software is also designed to drive you into thinking about including some form of expense you've not thought about before, about putting those expenses into your business so that you get claimed for what is rightfully yours. And that's powerful, that's useful, that's really intuitive, but also it makes it so that you're saving time later down the line because all the information is already going into a software. It makes it really easy then to file tax returns and everything else. But the key savings here, the key time benefit and the key major benefit is what we call real-time information, RTI. Now the idea there is because you're putting information into a software means it's really easy for you to have a look at the information that comes out. So you can look at reports and you can look at everything else that comes with it, cash flow forecasts and all those lovely niceties. In fact, over at the sister channel, we've just done a video on how QuickBooks is great for small businesses in 2021. And you'll see all the beautiful benefits and how to get started and what to look out for and everything else that goes with it. But the key thing about this is about making sure you don't miss any thresholds or anything like that. One of the key things as a small business is when you get over £85,000 of turnover, you must become VAT registered. And that turnover can sneak up on most businesses without them knowing it. So you've got to be prepared. You've got to be able to understand what happened in the last 365 days of your business. Because that turnover isn't just based on a 12-month process and it's stuck. It's a rolling 365 days. So you can be as tax savvy as you possibly can be. You can use every tip, trick and everything in the book to make your company as tax efficient as you can. But if you miss a key milestone like having to become VAT registered, then the consequences involved and the amount of taxes that you may have to owe in deferment and all the nastiness that comes with it can completely destroy all the good work you've done till there. So having some software backing you up and having some software that means you're not going to miss those milestones and not going to miss out on those elements there is crucial. And it can be the difference between a profitable business and a business that unfortunately has to fail. So use software, use real-time information and make the most out of it for your business. So there are some of the real big tips there, mainly to do with making sure that you've got that separate bank account so that you can be disciplined, making sure you've got the right business set up at the beginning, and making sure you're using software to make your life easier and to make sure that you've got information. But there's also one key other aspect and bonus tip for you. Now, as an accountancy firm, this may seem obvious and it may seem like we're, trying to sell our own services, but it's not. Having an advisor can be crucial, but it's not for every business out there. Some businesses out there, they have no need really for an advisor. They're happy and it doesn't matter what business advisor they have, whatever figure that they've put on their tax return will probably be there or thereabouts, the same as what an advisor would say anyway. But there are certain businesses out there where having an advisor can be crucial to them. Looking at what R&D credits they could get, looking at different aspects of their business and looking at ways in which they can structure their business in certain ways where they can save taxes. For the vast majority of business out there, having an advisor most of the time pays for themselves. Having the right tax advice, saving the right taxes, putting the right pot money aside for the right pots can all be very, very important to how a business is when it comes to their growth. And growing a business is so tricky, so having the right team on board and the right advisors can make or break that decision. So yes, some people out there will not need a business advisor. And the only benefit they'll get from a business advisor isn't necessarily the amount of taxes they can save, but it will just be the time they save and being able to sleep easy at night knowing their administration side of running a business and statutory requirements have all been dealt with for them. But for other businesses out there, it's crucial you get the right advice. And obviously here we're going to say that Boffix is one of those people that can help you because we're proven to be able to help small businesses through these transitions. But it doesn't matter which business advisor you choose, as long as you do your due diligence, make sure they're a certified or chartered accountant, a chartered accountant being our personal choice. then you're going to be able to have people who are going to help your business, but also challenge them. Business advisors these days are not there, so accountants and bookkeepers is what I'm talking about. And their sole job these days is not just to be able to file your tax return and file your accounts on time. Newsflash, every business advisor, every accountant, every bookkeeper can help you down that route. But really do find a business advisor. A business advisor is someone who's not just going to make sure your accounts are filed on time, but give you some form of insight into how your business is doing, what you could do better, what to look out for, any changes that are going to affect your business. That's a true business advisor. And that can be the difference between your business surviving or thriving. Do yourself and your business a favour. Get the right team on board and see it grow. If you need any more advice on this one, don't forget to like and subscribe, because then you're going to see the rest of the content coming your way. And also the comment section below is also where you get to ask some questions. So let me know below, have you got a business advisor, and would you recommend a business advisor for your fellow businesses out there? My name's been Aaron Patrick. As always, it's been an absolute pleasure to do this video for you. I hope you have a great 2021, and I will see you in the next video. Bye for now.
I told him I can be a fighter if you want. I'll be there to catch you if you fall. I can make it brighter when it's dark, when it's dark. I told him I would do it all for you, and I know you do it for me too. I can be a fighter if you want, if you want. I can be a fighter, I can be a fighter if you want. I can be a fighter if you want. All the way that I feel, yeah, I know that it's real, cause I can get him out of my head. I don't care what we do, everything's feeling new. Even if we stay in bed, my heart is saying yeah, 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 yeah. You know I want him, nah, 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 nah. My heart is saying yeah, 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 yeah.
Hello and thank you for watching that video. What you may not know is this channel that you've watched this video from is part of a wider group. That wider group is called Apple Core Productions, and the 3 channels that we have involved are as follows: Aaron Patrick the QuickBooks Chap, Boffix Tax Tip. Finally, we have Apple Core Live and Geeky. All the links and everything are down below in the description, but it really means a lot to us if you can go and give a like to the other channels as well.